Well, it looks like we had a bit of panic selling on Wall Street last night. That has filtered through to the Asian markets this morning, our markets as well. Although it looks like there were some technical problems which actually caused that carnage on Wall Street last night.
Yes, Stephen, we saw 1,000 points, the Dow down by about 1,000 points in intraday trading, and I think that was mainly attributed to a trading error, Procter & Gamble stock. That was done in the United States. We saw a lot of subsequent selling off in the United States, and where we saw the VIX also spike by about 30%. So yes, definitely some major selling based on just a technical glitch that happened in the United States.
Of course, you mentioned Procter & Gamble. We also had shares in Accenture going from $41 down to just 1 cent. Of course, they only stayed there for a brief moment, but will trades that went through in that period be allowed to stay, or do you think they might be reversed?
I think the Nasdaq did come out this morning saying, or late last night, saying that trades between 20 to 3 and 3 p.m. yesterday in the United States that were over, that rose up by 60% or fell by 60% will be cancelled. So that would serve as some kind of relief or some kind of mitigation to the issue that happened yesterday. So at least some kind of sorting out of that issue is going to happen today.
Of course, it does look like this issue is going to be taken further, that the US government is going to be taking a look at the algorithmic trading and the certain trading that triggered these mechanisms, because you really can't have a 10% fall in 20 minutes, can you?
No, you can't. It adds just such instability and such risk into the market, and markets don't like instability and things that cannot be determined beforehand. And this kind of issue, is something that needs to be closely looked at by the exchanges and closely and quickly thereafter resolved. So I think it was a good move that the Nasdaq has done, and we saw the repercussions of such errors.
Of course, even before we had that 10% slide, the market was looking pretty shaky. It was down by over 1%. It closed 3.2% weaker. So there is still this volatility in the market. There are still concerns about Europe's debt problems, and they're not going away anytime quickly, are they?
No, certainly not, Stephen. I think the risk and the fears surrounding that are what started off the United States going down yesterday, and then obviously the error then added so much to it. But yes, the general markets, the world markets, have been reeling because of the fears regarding Greece and the expected filtering or triggering of the rest of the debt woes into the rest of the Eurozone. And as we know, the ECB also came out not really committing to buying any of the bonds issued by those faltering or struggling economies of the Eurozone. So it is still a very, very bad time for the Eurozone and also for the rest of the market.
Of course, the VIX spiked up 30% yesterday. So that's still quite far below the levels we reached in 2008, but it should be a reminder perhaps to investors just what happened on the markets back then.
Yes, I think it's just a horrible reminder, wake-up call for all the people that are, not expecting major falls or major declines in the market, and showing how the debt woes in Greece can have an effect on the markets in general worldwide. And so, yeah, just a big wake-up call and a big jerk for some people.
Well, we have the Dow Futures at the moment trading about 0.5% higher, so it looks like we could have a positive opening. Of course, we are getting some non-farm payroll data out today, quite important for the US economy on whether they're starting to see jobs being created. What's the expectation in the market about those numbers in Ntombenhle?
I think the market is expecting about 200,000 jobs created there in non-farm payrolls, and also they're expecting the unemployment rate, the US unemployment rate, to stay at 9.7%. But surprises to the downside on either of those numbers will not bode well for the market, for late trade in our markets, but also for trade in the United States. And it is Friday, Stephen, and nobody will want to take big positions going into the weekend, especially considering what happened yesterday, glitches and all. So it is big numbers that we're looking at. Non-farm payrolls is where all eyes are for this afternoon.
In Ntombenhle, our markets hit a high for this year of about 29,500 just about a month ago. This morning we traded briefly below 27,000, and that's a loss of about 8%. Do you think with this fall that there are opportunities for buyers in this market? Should buyers be getting in there?
You know, Stephen, I think that question really depends on whether you're a bull or a bear. And I'll talk about the top 40. You know, at 25,300 was where you know, the bear market rally really began, and we saw that you know, it has come down quite a bit. It's now sitting at around about 24,000, and a break below 24,000 rand to 24,000 points could lead to the next key resistance level at 22,500. That does sound far, but you know, it is very achievable within a week. We saw what has happened this week with you know, continued sell-off. But you know, should the market go beyond or go up from these levels from 24,000 to 25,300 and beyond, then we'll see the bulls back into the markets, and then that would represent you know, a buying opportunities. But it really depends on whether are you a bull or are you a bear at these levels. We are expecting to see some kind of consolidations because you know, short term the market is oversold.